HPQ just reported their earnings, and of course, everybody likes this stock, or it's on everybody's radar because Warren Buffett owns it, Berkshire Hathaway. Earnings per share came in 75 cents versus expectation of 74 cents. That's a beat. Revenue, however, did miss. $13.8 billion versus the $14.1 billion expectation. You can see right now, the stock is up about 1.3%. So we're going to get into a little bit of what they said. Now, a big thing for me from the HP side is, of course, the direction that the whole computer industry is kind of going. Remember, this is kind of what we have seen so far. This was the previous decade before COVID of the computer world and PCs, and it wasn't really doing anything. And then all of a sudden COVID happened and we spiked up here, and now we're coming right back down here. So this is, we had no growth in the PC industry for about a decade. So just because it's coming off of this spike, which was some type of anomaly situation, such as a global pandemic where people were staying home, replacing computers, getting a computer for the first time, doesn't mean that it's necessarily a bad thing. It's just coming back to the status quo. So let's see what they said about their quarter and where things are going. So personal systems net revenue was $9.2 billion, down 24% year over year. Wow, that's a big number. Let's see, with an operating margin of 5.4%. Let's see what else we have here. Printing revenue was $4.6 billion, down 5% year over year, with 18.9% operating margin. Okay, so you can see that everything is starting to come back down. Now, this is not necessarily a bad thing. It's just something that is going to happen. Now, looking forward, what do they see? HP GAAP diluted net earnings per share in the range of 40 to 50 cents. My guess, let's see, non-GAAP, and non-GAAP would be 73 to 83 cents. So that's the number that everybody's going to be looking at. If they're thinking that it's going to be 73 to 83 cents, this quarter they were thinking it was going to be 70 to 80 cents. So they're increasing it a little bit. I'm wondering where expectations are from Wall Street, but that's going to be something to focus on. Let's see. Where do they expect their revenue to be? Let's see. Anticipates generating free cash flow, $3 to $3.5 billion. What did they do this quarter as far as free cash flow? I saw HP generated $200 million of free cash flow in the first quarter. Now, this is an entire year. They're expecting to do an entire year of $3 to $3.5 billion, not just the quarter. So they did $200 million in their fiscal first quarter. Free cash flow includes net change in cash used in operating activities, $16 million. All right. So it seems like things are going to pick up. They're expecting things to pick up a little bit. We're going to see what happens with that. Let's get into HPQ. I have not looked at them in quite some time. I'm not going to lie. And the stock is up about 2% right now on earnings. So it's a $29 billion company. The one thing that gets me here, what's with this? $29 billion and the enterprise value is $67.46 billion. The difference between these two numbers is the debt. So I'm interested to see when we pull up the 8 pillars, what is going on with their debt exactly. Now let's continue forward before we do that. So looking at it, they pay about $1 billion in dividends. It's about 25% of their 5-year free cash flow, just a little over 25% of their trailing 12-month free cash flow. Gross margins, about 20%, bottom line margin about 5%. Everything here is kind of fine to me, except I want to know what that is. What's that difference right there? Because yes, it's tech, yeah, but I think this is why I didn't like it last time, now that I'm thinking. Maybe not. I mean, looking at their long-term liabilities to their 5-year free cash flow, they can pay it all off. They can pay off all of their long-term liabilities in 3.62 years. So maybe it's not that bad. Let me go to the balance sheet and just dig a little bit deeper into that. And guys, if you like the software that I'm using, you can get this. $7 for 7 days. Come and try it out. And right now, you can come and talk about HPQ in the community. I'm sure there's people out there chatting about these earnings because this is a stock that a lot of our users are interested in. So total current assets of $19.8 billion, total current liabilities of $26.15. So I typically don't like to see that. I don't like to see when your total current assets are greater than your total current liabilities. However, the free cash flow number does say that they could pay off their total long-term liabilities. Okay. This is honestly, this is one, if I wanted to dig deeper on this thing, this is where I would be using the community to chat about this and say, hey guys, somebody explain this to me so I don't have to go and dig any deeper. I'm sure it could be something that is so easy to understand and they're just like, yeah, this is what it is. That's very possible. Now let's get into the income statement. This is perfectly fine. You're seeing growth in the industry. Now I wonder if this $63 billion number is going to kind of revert back to these lower 50s. I don't think there was no big COVID jump like I was expecting to see from people staying at home, buying computers, buying printers, whatever. So that is perfectly fine. Net income, pretty consistent. It did spike in 2021. They are buying back shares aggressively. They almost have less than 1 billion shares outstanding. Their cash flow is, let's see, back to stable. I mean, they had that big net income jump in 2021. They've had a big cash flow jump in 2021, and now they're back to 3.67 billion. That debt number is very interesting to me. Very interesting to me. Why it looks like that. All right, let's go to the 8 pillars one more time, and I want to point something out. So for those of you that have not noticed yet, what you can do is create your own 8 pillars or your own 12 pillars or your own 6 pillars, 2 pillars, whatever you want to do. You can completely customize it. It's under tools. It's called Pillar Screener. It's going to drop down and you can completely customize any pillars that you want. You notice I have ROIC. Oh, I remember this now. So something is skewed here. That's what it was. I remember HPQ. Something was skewed with the ROIC. That's probably what's leaning into that debt number. Or that difference in enterprise value, that's what it was. So the ROIC here is a little bit off. Something is funny in maybe the way they're doing accounting, maybe something is coming through. But you can see that I like to see a ROIC greater than 12 instead of greater than 9, just a little more stringent. So let's see what the analysts say. And you could see we're up almost 2.5% right now. So people probably like the forward guidance more than the missing on revenue by a couple $100 million. All right. Earnings per share growth, $3.35 to $3.52. Basically nothing. Revenue growth, call it $58 billion to $62 billion. Not a lot of growth. Not a lot of growth here. Honestly, you're probably looking at like 1.5%. But again, not a lot of analysts on this. It's a pretty boring company, and outside of Warren Buffett holding it, don't think a lot of people would be paying attention to it. So let's go to Stock Analyzer tool and do a quick review. And I'm actually going to go negative 2% to start with, 0 and 2. Let's see what happens. Profit margin. I'm going to go with 4.5. I will go 5.5 and 6.5% profit margin. Free cash flow margin, I'm going to go a little higher, 5.5, 6.5. and 7.5. And for the PE, I'm going to go with 12, 13, and 14. It is at a 9 PE right now, so I'm going to stick with these 12, 13, and 14 numbers. And my return, I'm going to go with a 10% return, 12% return, and 14% return. 14 might seem high for 2% revenue growth, but that's where analysts are expecting them to be. Granted, I'm not putting all my eggs in the analyst basket, but let's see what happens with this one. It's on my watch list at 25. For me, I'd want to buy this company dirt cheap. I'm assuming I'm going to see a lot of green here, and I am. So I'm basically seeing, 45. Let's see. Let's put in 4.5. There we go. That's better. $26 to $32, $42 to $48, middle ground, $34 to $40. It's on my watch list at 25. This is something that I want to get dirt cheap. That's just me. So if you like these earnings reaction videos, subscribe to our channel, go try our software. You have a great day.